Welcome back to the Steel City, home of the six-time Super Bowl champ.
Yeah, stairway to seven, sir.
Stairway to seven, six-time Super Bowl champ, the Pittsburgh Steelers. Off to a rough start last night in the first preseason game, but that's not why we're here. We're here to talk about the big bust, the big drop. Bad news this week since we last spoke in the crypto world, I think, for me.
Yeah, well, again, as you all know, he's very glued to 5-minute price candles. So whenever you zoom out and on the day or the week candles were down bigly, it's pretty rough for him.
Very
so
rough.
I had to give him a pep talk a few days ago.
Yes.
Ensure him that he's all right and he's going to make it. Wag me, as you were actually told by someone we work with.
Yes, I had to actually... I had to look up what wag me meant, but I did appreciate the sentiment.
That's like a last cycle term.
Oh.
Yeah. We haven't really had a defining meme for this cycle, I feel like, because previously we'd have to the moon, wag me, there are a bunch, but nothing really so far this cycle.
How about don't dump?
Don't dump? You could try that.
Hashtag don't dump.
Hashtag don't dump.
There we go.
Well, regardless, welcome back to the show.
Yes.
Episode 12, I believe. That's a
Yes,
solid
sir.
3 months worth of recording, so
Yep.
that's pretty cool. Congrats, quarterly.
Yes, exactly. And we have 300 followers on our newsletter now, too.
Yeah, subscribers on the newsletter. If you
Subscribers.
haven't seen it, check it out. It's the high quality content. We go deep dive on a couple topics. So we got story of the week, trade/portfolio management tip of the week. Go deep on a protocol, talk about markets, and yeah, highly recommend. So.
And the biggest news there is we've made 13 U.S. American dollars.
We have ad partners now, so thanks. Shout out VinoVest, and we got a new one this week. So,
We do?
Yeah, we have another one.
Really?
Yeah, you'll see it.
All right, let's
You guys
go.
have to wait and see. So we got partners rolling in. Don't miss out. It's good information.
Yes.
So.
All right, well, you ready to get started?
Yeah, I'll share my screen here. We got a lot to go over today. A lot happened this week, obviously, with prices to start, but also just in terms of news. A lot of interesting things going on. But, of course, we have to start with the prices. So.
Start with the prices. We're going to show some big red vampire-like
You
candles
see
today.
Apple down there? Oh, we're actually up on the week, buddy. So you can't even be. That's a nasty wick, of course, right here. But this is the
Yes.
Bitcoin weekly chart. Honestly, we're still in the range, like where we were. Whenever we were down here, we were like, oh, that kind of sucks. Went back up. But it's still in this all-time high range from that first little peak that we got early 2021. And we're hanging on, but this wick down here was nasty. And I believe we'll go over this in a second, but there was over $1 billion in liquidations on a Sunday evening this past week. And that's what kind of led to this price dump. And we can talk more about that, but I'll get your thoughts just on the chart. How do you feel? I feel like we've just been saying the same thing because we haven't really done anything in the last 3 months.
We haven't. And, I want to know why. There's been speculation that dumped
Oh, I can explain.
everything. There's the
Yeah.
carry trade issue, which we're going to talk about later. And then all of that's coupled with extremely low liquidity on a Sunday evening. So I guess we'll talk about that later, but I was not happy.
Well, we can talk about it now. The thing that happened is it's weird for prices to tank on a weekend, of course, because traditional markets aren't open and the markets are becoming more institutionalized. So the players with big money are not working. So it's interesting to see these price movements. But Sunday night, a bunch of wallets tied to Jump Trading. It's a Jump Crypto. It's a subsidiary of Jump Trading, which is a Chicago-based market maker in traditional markets. But they've been in crypto for a while, and they started moving hundreds of millions of dollars in ETH and other assets, and they started liquidating, supposedly, a bunch of these funds on a Sunday night, which is really strange because liquidity is really low, so it's going to hit the order books really hard, and they're not going to get the best prices, presumably. So there's a lot of speculation about why they were doing this, and I just want to point out that this was on the heels of enforcement action or a probe by the CFTC about a couple months ago, so it could be related to that, and now there's speculation that they're just shutting down the whole operation. So this is how it started, and then it was exacerbated by the yen carry trade, which we can also talk about. But anything you want to say on the jump piece?
Not really in the jump piece, although isn't the guy being investigated sort of is there a famous person involved in this, the head of Jump Trading?
He's just famous because he's young. He was like 25 whenever he took over. He was like leading Jump Crypto. I forget his name, but he, that's rough. But He took over, he was 25, he was like 27 or 28 now.
Wow.
So he's just really well known. And they've been embroiled in multiple controversies. So they were deeply involved in Terra Luna. And this is actually the topic of the newsletter this week. Deeply involved in Terra Luna. They market made for the firm. They had an exclusive deal where they had to defend the UST peg to $1. So they would be able to had a deal with the Terraform Labs developers to be able to buy the Luna token for like 40 cents whenever it was trading at 90, so that they could dump it on the market for UST and defend the peg. And that gets into the conversation about how the stablecoin worked, but they were deeply involved in that and profited, I think, over $1 billion from that whole thing when people lost a lot of money.
Wow.
So they were involved in that. They were involved in Wormhole, which is like a cross-blockchain bridge that got hacked. They've been involved in, like, they lost a bunch of money in FTX. So they've just been, like, involved in everything. And this is just the latest episode.
Everything bad.
Pretty much. So it's a lot of controversy.
Gotcha.
Yeah. Okay. So let's take a look at ETH before we talk about the carry trade. And I'm going to say my piece here real quick. Like, if you're trading crypto actively, it's a hard game, right? Like, you have to be paying attention to the markets, like, choose the fastest horse. And if you're good at that, that's great. And, like, maybe Bitcoin or ETH is not the right choice at a particular time in the market. But if you're a regular person, you have a job, you have savings, like, you don't want to put your money into some meme coin or even like anything other than ETH or Bitcoin for 10 years and feel comfortable doing that. So it's like, that's the trade-off you get. But it is true. I am coping a bit. ETH has not been strong, and it's quite sad. But any reflections on this?
Yeah, I saw that red candle coming, tried my hardest to get out of a leverage trade, and basically through the nature of early crypto protocols and lack of liquidity couldn't, and took a bath on that. Now, don't feel sorry for me. I knew going in all this stuff, and I think Ben's going to post a little bit of an editorial on our newsletter that I wrote with more details about that. But it just looks brutal. There's nothing to say. I'm confused because in the markets, or not in the markets, in the use cases, it's getting stronger and stronger for ETH and blockchains and firms using it. That's not reflected in the price right now, and that's a hard thing to reconcile. But still, very long on ETH, still long on Bitcoin, and that's about it for me actually on the two. Just this is a rough time.
Yeah, I mean, the wick is tough. Like, to be honest, so whenever I got into crypto, it was like in the 2021 bull market, and I was investing throughout this time. I definitely bought a lot of ETH up here, and then I experienced all of this. So to me, this is a little bit like that's a couple big red candles right here, and this wick is pretty nasty.
Yeah, what's that wick go down to?
Like 2100.
Yeah, that's the wick that killed me.
2126 seems to be the low,
yeah.
But 2116. But yeah, no, I agree with you. This is the thing that's frustrating about crypto markets. It's very speculative, and you can try to outperform the market. But like in my position, I'm more comfortable. I happen to believe in the technology fundamentally, and I'd rather just stack ETH and Bitcoin over time. But in the short term, if you're trying to trade these things, it's not very comprehensible at times.
Yeah, just looking at this chart, the other thing that I see besides the price going up and down is we're not even close to the volumes we saw in 2021, 22, 23. It probably means retail's not back yet. That, and in the end, could be a good thing. But we need to get more volume at some point, and it looks like to me maybe it's just going to ramp up over time now instead of just these giant volume spikes.
Yeah, I think the market's maturing, and we've been talking about this for a long time, but it's probably good for crypto in the long term. And like you said, there's no retail people trading all these random NFTs, meme coins, and stuff right now. The retail is definitely not back.
No, not at all.
Last thing to look at is Total 3. Not good either. Nowhere. This just reflects what we just said. Nowhere close to the highs back in 2021. So we'll see if this recovers. But again, it's probably going to be continue to be a big boy market. The big players with actual products mostly will succeed. So we'll see. But last thing here is that stocks also sold off, which I wanted to mention. Yeah. And there's a lot of speculation about why. So crypto was definitely affected by this as well. But the main two things that people cite are bad economic data and recession fears, and also geopolitical tensions because potential war in the Middle East. So this kind of scared off investors, and that was one reason. And then two is talk about the so-called yen carry trade. And basically what this is you go to a low interest rate economy. In this example, it happened to be Japan, who had negative interest rates for a long time and then very low interest rates. They raised their interest rate on the yen. So what people were doing was borrowing at this low interest rate in yen, swapping it to dollars or other dollar-denominated assets like U.S. Treasuries, U.S. stocks, or cryptocurrencies, and then profiting the difference between that. And that's what people were doing on a huge scale. And whenever Japan raised their interest rate, it made that way less profitable and forced people to unwind, presumably. So people basically had to sell all of their US dollar denominated assets that they bought with borrowed yen, sell them, swap back to yen, which puts more upward pressure on the yen, which only makes the trade worse for others. And then it just
snowballs.
Yes. So I explained that also in the newsletter in more depth, but that's basically what happened, and apparently billions of dollars were unwound in this trade, which put huge downward pressure on U.S. equities. So,
yeah, and I kind of was thinking that U.S. equities were overpriced. I thought the Magnificent Seven and the Nasdaq needed to kind of get put back in place a little bit, and kind of dropping down a level. I guess Nvidia's next chip is going to be delayed, so that's going to push profits out, and they started going down. I think the whole AI narrative is also unwinding a little bit, which isn't a surprise. There's way too many promises, and it's not the first time AI has done this. But that narrative's unwinding, and it's getting back to a more normal, I'll say a normal speculative market, a normal tech market, as opposed to this just craziness led by NVIDIA and all the AI stuff.
Yeah.
So that was a good thing. We're still, just one rally away from the all-time highs in every U.S. market, but it's at least moved to a little bit more sanity now in terms of where the prices are on some of those stocks.
Yeah. Well, I think it's funny. I don't know. I don't invest in the stock market currently. So whenever I hear like people talking about like, oh, the stock market rallied today and like the big index rallied or like huge red day and it's like 3%, I'm like, these guys stink. They're just little babies over here. Like, well, that's nothing. Like this 25% down move. That's a move right there.
Yeah, I don't like those moves.
No, it's great. It's great. So forged in fire as a crypto investor. I probably shouldn't invest in equity markets, but hey, yeah, you experienced it firsthand. You can't knock it.
Yeah, I don't like it. And when you post my editorial, then everyone will see my thesis going forward.
All right, that's fair enough. Okay, last thing in the markets here. Pull up this article. So crypto liquidations top $1 billion on this Sunday night as Bitcoin dove below 50K. ETH was down to that 2116 level that we saw. And here they cite the same things we kind of talked about. High U.S. unemployment sparked global recession fears. Federal Reserve may be tempted with interest rate cuts. That's not going to happen. Probably in September is what people are saying now. But $1 billion in liquidations on a Sunday is pretty nuts.
Yeah, that's very nuts. And coupled with this, lots of people got good deals buying Bitcoin under 50,000.
Yeah,
I think.
No, 100%. Apparently, it was interesting. I saw some data saying that the people who got wiped out and sold were mostly retail, smaller traders, and that the big boys, the asset managers, the large hedge funds, actually added to their crypto positions on this drop, and that's who was adding here.
Wow.
So interesting. I wonder how they decide. Like, what? I guess they probably have certain rules. If you dump 20% in a day, you probably buy. Yeah, yeah. So. Interesting, nonetheless, something to keep your eye on. But still, we recovered. Like ETH's at 2617. It dumped super hard, but that's like a $500 move off of that 2116. Bitcoin below 50, up to 60 now. So recovered pretty strong. I don't think this is like a sign that we're out of a bull market. I really think we still are in a bull market. This was just like a structural thing where the stars aligned with the yen carry trade, with jump selling and all these. So. Last thing to say here is that Ethereum ETFs actually had 50 million in inflows as ETH drew down, so that kind of reinforces what we were talking about with the institutional players adding. So yeah, so that's silver lining, I guess.
Good.
Yeah. So I guess to move on, let's see what we got here. Okay, this is something I wanted to talk about, which is interesting. Did you hear about this?
Let me see what
Operation Choke Point 2.
Oh yeah.
So it's
couldn't
very
believe
strange.
this.
There's mixed signaling again, especially from like the Republicans in the United States have made it very clear that they want to be pro crypto, and like that's great for us. And then the Democrats, after realizing they were losing some votes and some money, it seemed like they changed their tune multiple times, but they keep flip flopping. It seems because I guess the Fed is an independent entity here, but they are under a Democratic administration, and apparently there's ties to other Democratic politicians. But just to say what happened real quick is that the United States Federal Reserve hit crypto-friendly customers bank with an enforcement action, basically saying that they are not stringent enough with their crypto customer due diligence, and that now they propose a new rule change where basically every single new crypto customer that Customers Bank wants to onboard has to go through and be approved by the Fed, which is pretty. Aren't they a private?
If I want to become a customer of Customers Bank,
they're not a retail bank. They're for crypto companies.
Gotcha.
But yes, they have to go through a regulatory body in the United States to be able to do private business with private companies, which is pretty bad. And this is just weird as it seems. You see Winklevoss here is he's not really fond of the Democrats. He's saying that like Kamala Harris's crypto reset, where she's going to be more friendly, supposedly, he's calling it a scam, which I don't know enough here to understand like the forces at play. But it's still strange that this happens because...
Yeah, I'd like to know more details because that is very strange and we don't know everything there, but that doesn't seem like traditional U.S. capitalism. Back to the thing about the Republicans and Democrats, I think the fundamental thing is that the Republicans have been fairly unified across, medium right, hard right, middle right. Crypto is something we're going to embrace one way or the other. And Trump obviously is, for whatever reasons, he's very public about it. On the Democratic side, you have Elizabeth Warren and a very small number of Democrats who are incredibly vocal about not liking it. I'm not convinced that the rest of them feel that way. I'm not convinced that Kamala and her group, with her being from California, an innovative state, tech culture, I'm not convinced she is going to fall in line with Elizabeth Warren and that group. So I think time will tell. Certainly, if the Republicans win, it'll be better. It probably won't be as good as they say. And if the Democrats win, it won't be as good. But it's probably not going to be like Elizabeth Warren or Gary Gensler bad either. That ship, I think, has sailed.
I hope so. The thing that I bring up here is that I do not understand who they are talking to with this sort of thing. Like, who wants this? Because I talk to normal people. They either don't know about crypto or they're just like, oh, like I've done in the past, like I lost some money, I made some money, whatever. They just don't have an opinion. So I don't understand where this super hardline anti-crypto stance is coming from. Like Elizabeth Warren had her Twitter banner as I'm building an anti-crypto army, or she at least tweeted that. Have you seen that?
I've heard that multiple times.
Like, who is supporting that? Who does she think she's talking to?
So, on one level, I can see, a Democratic pillar, which is protect the consumer. That's one of the things they've always been for, and that's where they're going with this. But at a deeper level, crypto enables the little guy to get around, the profit-making capitalistic notions, big businesses. So it seems like it should be the other way around, honestly, that they should embrace this, and I think they could find a home embracing it with structure. I think a lot of people in the industry probably say, yeah, if we had a little more structure, we could get rid of the scam players, but still be able to innovate.
Yeah, I mean, that's definitely true. I just don't understand the motivations. But I think you're right. There's definitely... It's an interesting technology at the end of the day. Like, it is true that it's very, at its core, like a libertarian free markets type of technology, of course, but there are these other aspects to it where it can kind of undercut these big players, this huge big business capitalism thing, as you said. So,
is there a crypto caucus in Congress?
I believe there is.
That's a great idea. I'll have to look that up.
Yeah, but the last point here is that there are definitely Democrats who see it the way you do and the way you just stated.
Yeah.
Like there's like Richie Torres from New York. I know I live in New York, and he's been very pro crypto. In a hearing with Gary Gensler, they were trying to determine whether ETH is a security. I forget what the hearing was for, but Gary Gensler was there, and Richie Torres asked him, if you tokenized a Pokemon card, does that make it a security? And he asked that to Gary Gensler direct to his face, and Gary couldn't answer, of course.
Gary didn't answer anything.
No, he doesn't answer anything. He just deflects. But I thought that was pretty funny that he brought that up. So, okay, we can pivot here. Last thing to say is that the actual rule here from the Fed is that customers' bank must now give the Fed 30 days of advance prior to entering into any new banking relationship with a crypto company. Like that.
Wow.
That's pretty ridiculous, to be honest.
I don't like that.
Apparently, it was obfuscated through different pages on here, and they did not make it clear, and it just looks like they're trying to cut out the crypto industry again, and like the super conservative Republican leaning people in the crypto industry are not happy about this again and speaking out. So we'll see how this plays out. Last thing here, let's go to this was interesting. I don't know where this came from, but Donald Trump's children, Donald Trump Jr. and Eric Trump, I don't even know, he has like all these random kids that just pop out of nowhere. I don't even know who they are. But I think it was Eric Trump, tweeted earlier this week that he is fallen in love with DeFi and crypto, and that's all he said. And he said big things coming soon. And then later in the week, he clarified, because people were speculating that it would be a meme coin, because there was that whole meme coin saga with the DJT involving Barron Trump and Martin Shkreli. We talked about this.
Yes, we did.
But he clarified it's not a meme coin. It's like a product that's going to take on the banks. So it'll be interesting to see what he comes out with. Looks like maybe he's building a real product as opposed to just stupid coin, which I like, I guess. But this was really random. I did not know what to make of this. Any thoughts here?
None.
Okay, I'll read his quote real quick. What we want to do is take on a lot of the banking world. I think there's been a lot of inequality in that only certain people can get financing, so this notion of decentralized finance is obviously very appealing to guys like me who have been debanked.
So does he fundamentally understand that to get financing in crypto, it's all collateralized? I mean, I doubt he's going to...
Probably not.
Okay.
I think, the only thing here is that, this is like the age-old problem in crypto. It's like, can you achieve uncollateralized or under-collateralized lending in DeFi? And it's like, not really, because you have to vet the reputation of the person applying for a loan somehow. And people are saying you can do this with like zero-knowledge proofs and kind of verify certain pieces of information that this person can repay. They have these qualifications, but it's like, he doesn't know anything about that. I think he's just like talking out his butt, and it really is like the Trump and his administration pandering to the crypto industry. And I think a lot of the promises they're making are great, and it sounds good, but they're probably empty. Trump likes to say a lot of stuff, in my experience, where he just says things, and it's I don't know. We'll see. But this is an interesting
doing nothing is a win.
Yeah. It's better than what the Democrats were doing for a while, but he's making all these promises. We'll see if he does it. But if the Trump administration gets into the White House and starts buying Bitcoin on the U.S. government's balance sheet, that'd be pretty sick.
So that would be very interesting, and that would not be the Fed, because they don't control the Fed. That would have to be who? Who would buy?
I don't know how it worked. The U.S. Treasury? I don't know.
I guess it'd have to be the Treasury.
Yeah. Who? Do you know who? Who owns our strategic petroleum reserve? Is it the Treasury?
Yeah, they own the gold.
That would be it. Then.
Okay.
That would be the Treasury. Yeah.
All right.
But it's not like we have money to do that. Like our interest payments on our national debt has exceeded our revenue from taxes. So I don't know. I guess it's borrow more money, leverage. U.S. government's leverage long Bitcoin. They borrow from the U.S. And other countries via treasuries, and then
that's what Sailor's doing.
Yeah, you'll just leverage Bitcoin. What if the U.S. government turns into MicroStrategy? Just leverage long Bitcoin. We'd be at like 100 million Bitcoin.
Yeah, I guess that could happen, but all right, that's for another time.
I think that's a good conversation. But okay. Last thing on the topic here, you mentioned her earlier, but Elizabeth Warren,
Yeah.
back anti-crypto. She does not like Polymarket, which is interesting because Polymarket's like the one crypto product that people are actually using, and it's gotten a lot of attention because of its political outcome forecasting that's been in the news recently.
Yeah, so I'm not a fan of her stance because I don't understand it, but the Polymarket thing specifically on political wins and losses does make me think a little harder than just generalized betting, particularly when we're talking about $500 million, because that starts to get into real money, and people don't like to lose, and you never know what people would be motivated to do with that amount of money on the line. So I'm not as opposed to we can't bet on politics as I am you can't have crypto betting things. So I'm more in the middle on this one. I could see it both ways.
Yeah, no, I kind of agreed with that. I was like, there definitely are some bad things that can come out of betting markets for like really serious issues. There was like an infamous, I think it was actually on Silk Road maybe. Like there were like bounties on people, which is like obviously terrible.
Yeah.
And a similar type of thing could ensue. I don't know enough about how Polymarket operates in all of this, but the one thing to say here is that this does enable much better polling than because everyone knows a lot of these media outlets are super biased. Like they're just making shit up,
Yep.
And it's like, who knows what their angle is? Like you might say the Democrat controlled media outlets want to say make it look like Kamala's losing maybe so more people get out to vote and to help her. So it's like there's always that incentive there, but whenever people are putting money on the line, it kind of forces more accurate forecasts. So it's a good product.
Generally, I would agree with all of that.
Yeah.
Agree with all of that.
Yeah, but here she is again, back in the crypto space. She just can't stay away. She's obsessed with.
Is she from
crypto.
Vermont or New Hampshire?
New Hampshire, I believe, or Massachusetts, one of the two.
Well, if it's Vermont or New Hampshire, those are traditionally more libertarian states. Sort of a mentality of we're going to do it ourselves. We don't need any help. We're the small guy, but we can still survive. So I don't get it. There's something. She's got something up her butt about crypto. I don't get it.
I don't get it either.
All right.
Maybe her and Nancy Pelosi are working together. Pelosi is just mad that crypto people are making more money than her finally because she's outperformed every hedge fund for the last 20 years. So definitely not corrupt at all. Definitely not. Okay. Next thing, let's see. We have BlackRock and I think it was Fidelity, but BlackRock in partnership with the NASDAQ wants to be able to add options on the Ethereum ETFs. And apparently just from listening to the Bloomberg boys talking about the ETF markets, this is a core function of ETF markets because you need the spot product, and then you need options to be able to hedge movements in the actual underlying thing because you can do options on spot ETH, but that's a little fundamentally different from the ETF products for some technical reasons. So to have a complete market structure, apparently you really need the options, and that'll bring even more interest and volume to the space, they claim. So this would be big, and the fact that BlackRock is trying to achieve this in partnership with NASDAQ is really good.
Now, is this going to take forever again? And
I have no idea how this process works.
Okay, all right.
Presumably it's shorter because there's already the product already exists.
Yeah, it doesn't exist at the.
So this is just options on the product, which is a new product itself,
but there were already options on the spot ETH price before the ETH. This is options on the spot ETH ETF.
No, there were no options within brokers. There was options on the futures.
Oh yeah.
These futures ETFs, and then there are spot options through DEXs and stuff, and not DEXs, I guess, but decentralized platforms. But this is interesting. I think this would be really cool. And
kind of related to this a little bit, as you could probably tell, BlackRock is one of our favorite TradFi firms. They're basically plunging headlong into crypto. I think my new second favorite crypto-focused firm, though, is Bitwise.
Yeah, they're great.
I follow some of those guys on Twitter. They are all into this. It seems like they're doing a good job. There's a little bit of community give back on their Bitcoin and ETH ETFs to the developer community. As much as I like Larry Fink, it being the old wizened guy that leads $10 trillion in assets, the guys that are running that seem like just normal normal-ish, smart, good dudes that are in it for the right reasons. And I think crypto needs more of that. So shout out to the Bitwise guys.
Yeah, they're crypto native, so they've been building crypto products
Yeah.
for a while, and they're good dudes. Matt Hogan, I believe is the CEO there. I've heard him speak on a few podcasts, and they're very, very crypto aligned. And they're like a little guy that was punching above their weight class
Yeah.
in terms of how many assets for the ETH ETF that they were able to attract. And I think it was because of like these marketing efforts that donating to the Developers Guild and these other initiatives that they're doing. So I think having like the combination of the big boys like BlackRock and others, and then crypto native guys in the market's a good thing.
Absolutely. Absolutely.
Yeah. So here's another thing that happened this week. So Ripple was in a lawsuit with the SEC, and this was going on for a long time. I guess it just finally settled, and the judge fined Ripple $125 million, which was like way less than the SEC was seeking. So Ripple was framing this as a win, and Ripple's token pumped on the price. But I just wanted to bring, I don't know that much about this, to be honest, but I just wanted to bring it up because it is like another case that the SEC kind of lost, which is good to see.
Like, how's Ripple any different? The Ripple token any different than ETH or Sol or?
It's not. It's like a ghost chain, basically. It's like it's supposed to be optimized for like corporate payments, and like it's like a payments chain, basically. It's like Bitcoin. It doesn't do that much. I think it's programmability is limited. It's like kind of it is a public blockchain, but it's like optimized for like corporate payments and weird stuff like that, but like no one really uses it. That is a weird thing about crypto markets. There's like all these coins that are just like entrenched and have just been near the top for a long time, so they just sit there, like Cardano. Like no one uses Cardano.
Yeah.
There's like 30 guys on Twitter who talk about it, but like no one uses it. It doesn't get any serious attention, but it still has some ridiculous market cap and valuation, more than like half of the companies in the S&P 500, which is just ridiculous.
Because no one trades it, so there's no.
I guess.
Yeah.
No, you could look at the volumes. The volumes are probably decent too, but it's like I don't understand how this happens, to be honest. This is just one example of like being in crypto is annoying because half the industry is legitimately just
Zombie chains?
It's a farce.
Yeah.
Yeah, it's just people cash grabbing. It's people LARPing. It's not serious at all. And then that gets mixed in with the legitimate people trying to build technology. So this is just another example. But Ripple won. I like to see the SEC lose, so that's good at least. And yeah, so we'll see.
All right.
It says the SEC is likely to appeal the July 2023 ruling. Now the judges imposed a sentence. Yeah,
Whatever.
We'll see. The SEC is still going after it. Anything else you wanted to bring up?
Not really. I mean, this was another quick run through today of what we've got going on. I think, what is it, about 40 minutes, 45 minutes, something like that. So that's good. No, this has been a very eventful week that at the beginning of the week seemed craziness. The end is near. Seems like it's stabilizing, going back up. You know, we're still well off the highs of everything. So hopefully this will run longer. Hopefully we continue to get solid. I mean, the thing I look for is solid acceptance by the big players of the various aspects of crypto. The ETFs are one example. The tokenization of securities and other things, another example. The TradFi funds that aren't in the first 9 or first 8 or whatever they call them are now trying to get in because they're seeing customer demand. It's a different kind of retail coming back than what it was before, but I think nonetheless it's all a good thing. And still, we have the number one biggest macroscopic tailwind hasn't started yet, which is the Fed lowering interest rates.
Yeah.
I mean, all this crap we talk about is like a flea on a cat's back compared to the Fed lowering rates.
Yeah, I think you could even zoom out farther than that, and it's like we've gotten to the point in the United States where basically we have to monetize our debts. You basically just have to print money to be able to keep paying people, unless you bring back some form of austerity, which is not going to happen. So over the long term, like a 10 to 20 year time horizon, they're just going to have to keep printing money. And so any hard limited supply assets like cryptocurrencies that also have this utility aspect are going to do super well. And it's like, if you're playing in these markets over the short term, just don't wash yourself out. Like, understand why you're investing in these. And if you happen to be fundamentally bullish on them, just keep stacking high quality assets as you see them. And like, yeah, I'm like, maybe over the short term, you can choose a faster horse. You can like get into the narratives of like AI or DePIN or whatever the crypto sector is. And maybe you could have made more money, but chances are, if you're not doing that professionally, you're just going to lose more money. So just bet on the longer term tailwinds, the secular trends that are going to push this asset class higher over time. And I'm a firm believer that that's the case, and that's why I'm in crypto. And I think that's what people don't understand. Like, people are like, they're like, oh, like crypto's down like 15% today. I'm like, I don't care. Like, I really don't. Like, I'm investing in assets because I believe in them over a longer term period. So, you know, keep your 7% annualized stock market returns, sirs, and your 3% massive drawdowns, and I will have fun with my cryptocurrency markets.
This is what I deal with.
We have way more fun over here. Like, everyone's just all
Monday
like,
wasn't fun, bud.
It is fun. It is fun.
It wasn't fun.
It is fun. If you got to zoom out. You just got to. If you lose all your money, it's not fun. But like, it is what it is. You just learned a lesson. You didn't lose all your money.
No, I didn't. It's fine. I'll be all right.
Exactly.
I'll make it.
It's a rite of passage in crypto, and
you keep saying that.
It ask anyone in the entire industry. You have to lose a lot of money before you make any money at all.
Well, that's what our friend Henry said.
That's how it works.
Yeah.
That's literally, if you get into crypto and avoid that somehow, I actually don't think you can. Like, that's just how it works.
Yeah.
And you're just learning about how markets work. I think it's a great financial education because you have to understand everything at a very basic level. You have to understand liquidity. You have to understand these different forms of markets. And it's like a very good education in how finance works. And I think more people should do that. So you can look at it as losing money, but you can look at it as a lesson too. And I think, love the space. That's why we're here. Not going anywhere. So.
All right, well, big picture. We're trying to do more on our Twitter, post more content during the week. Mostly it's going to be just recaps of the newsletter, but want to get that out there. Please keep following the newsletter. Check out our advertisers. That really helps. We think more content is on the way. We're a little time constrained right now, but we want to keep doing that, and we love doing our show here every Saturday morning.
Yeah, so. This is easy. If you guys have any ideas about what you want to see, any other like segments, any other, I don't know, walkthroughs of protocols, maybe like share what we're doing on chain, which would be interesting. I think that'd be helpful for people. But yeah, any ideas, just throw them down below. But we're going to keep doing this. We're not going anywhere. So yeah. Sounds
good. All right. Well, next week we have a new location for you again, which should be... We do next Saturday. Yeah, so that'll be good, and we will see you then, internet capitalists.
Yep. All right. Peace. Don't get washed out of the markets. Remember, long term tailwinds. We'll see you later. See you next week. Thank you.
All right. That's good. Let's see.